I know there are a lot of news headlines and feelings of fear about the real estate market. What's really important is to look at the data to ground those feelings and understand what's truly going on. So stay tuned with me as we do just that. Hi, I'm Teresa Wellman with homeownerexperience.com. Today we're going to talk about the local San Jose, Santa Clara County real estate market to understand what's going on. The market has been normalizing from the crazy times of the pandemic, but there is a lot of news about how things are shifting. The housing market enters into a recession, housing market chills, demand is weakening, all this fear-based headlines. But what's really going on? Let's dig into that. So I'm going to talk about the fundamentals of the real estate market with supply and demand. And we are going to really understand what contributes to these factors of the real estate market in the macro view, and then get into the specifics here in San Jose area. We're also at the end going to talk about what you can control and whether it's a good time to buy or sell. Stay with me to the end. All right. So supply and demand is a factor that drives a lot of markets. It definitely drives the real estate market, and it drives many other things. Think about at the beginning of the pandemic when masks were in high need and you were paying crazy prices for masks because there was just no supply of them, right? Same thing happened with toilet paper and lumber. Lumber was 3 times the price at the end of 2020. Let's see how those factors can affect prices that people pay for properties and real estate, and what other numbers we can look at and metrics to understand what's actually going on. Okay, so here is a chart of the Santa Clara County market. First off, I want to compare 2007 to today because there's been a lot of fear of a market crash, and that's what we did see in 2007, 2008. But how did the market locally here look compared to how does it look today? We're going to talk about that in detail. So first, let's look at the supply, or that yellow line, because if we have a lot of supply, prices can definitely go down, right? So that is one of the factors that happened in 2007. You can see that the supply started to really skyrocket and go up throughout that year. That caused prices to actually slightly soften. Then you see in 2008, inventory went up even higher and prices went down quite a bit. And that also, demand went down quite a bit. So to put it in perspective, the supply in 2007 is actually 4 times what we have today, or today is 1/4 of that. In June 2007, it was 4,609 single family homes on the market. In June 2022, we're at 1,100. So quite a bit different. Now, let's talk about demand. As you can see in 2007, demand did definitely soften, especially in the latter part of the year. That was partially because there were problems with banks and loans, and I think there was also probably some fear in the market. But today we have the bulk of millennial generation, which is the largest generation so far, hitting their mid-30s, which is the time that most people are financially and mentally ready to buy a home. Also, we have 12 million more households today than 2007 as our population continues to grow, and 5 million more people at the home buying age. So the demand in the macro scale is really strong right now compared to even 2007, and our supply is a lot less. So how does the San Jose market actually look? Well, here you can see that our supply is returning to a little bit more normal. If you've watched my market updates, you know that I talk about supply and demand often. And we've had a very unusual market in 2020 and 2021 and this first few months of 2022, where the supply was below the sales, meaning we were just selling inventory so fast and we just didn't have much inventory. But as you can see, it's normal for the yellow inventory line to be above the sales line. So we are just starting to cross over to that more normal market again. So what was happening with that intense demand and lower supply was buyers were paying a premium to get homes in that time. So let's look at the Santa Clara County numbers of the percent over that homes were selling above their asking price. This is what's really crazy. So in 2020, we were starting off with a really strong spring, and the peak was 105.5%. Then the pandemic hit and the overbidding really slowed down. As you can see, it continued to just gradually increase a little bit seasonally. It typically peaks sometime in the late spring, early summer. And you see here in 2020, 2021, we actually continued in the fall to have increases, with 2021 peaking at 111% of asking price. That continued to just go up and up in the beginning of 2022, peaking at 18% on average over the average sales price. What? That is just crazy premiums. And the number of offers is another factor that we can look at to show the intensity in the market. You know, we had 15 to 20, and that's not a metric we track, but if you're talking to an agent who's very active in the market, they're going to know what's going on with the number of offers. And that slowly decreased as we went through the spring as well. So all these factors were showing us that demand was actually dropping a little bit, right? Or inventory was going up a lot. And it actually started to, you see that inventory increase here. But this is a chart showing how much of a premium buyers were paying. So I have the average price, which is the orange line, the same orange line I have on all the other charts. But the red line here is subtracting the percent over buyers are paying on average. So what I want to draw your attention to is the delta between the orange and the red line. As you can see in 2017, 2018, when we had a similar market with inventory really low and sales higher, there was a premium being paid, and it increased until all of a sudden, when interest rates went up and inventory went up, that just almost immediately dropped down to back to zero, right? Same thing happened during the pandemic. There was a premium and it got bigger, and it topped out up here in March, April. And we've seen that drastically drop. Now it feels like the prices are falling, but you know what's really falling is that premium. Buyers are just not paying that premium anymore. So lack of supply is still going to be our problem, but demand is definitely softening with inflation and increased interest rates, just because not all home buyers can afford to buy right now. So ultimately, is it a good time to buy? Well, there's certain things we just can't control. We can't control interest rates. We can't control the economy. We can't control the feds and inflation and gas prices and all those monthly prices. But what you can control are your personal finances, your down payment amount, your reserves, making sure you're in a great financial place to be able to make that purchase and have it be a good financial decision for you. So if you're in that financial place, then yes, it's a great time to buy because the market is finally normalizing again. You're not going to be paying the pandemic premium. You have an opportunity to do inspections and negotiate repairs with sellers. You also are going to be paying appraisal price, not over and having to put in additional cash. All of these factors are really great for home buyers. It makes it a little bit more sane and a little bit more normal. And as far as sellers, yes, you're not going to get the pandemic crazy premium, but you still have over 30% appreciation that we've seen since the pandemic beginning. So you're going to capitalize on that appreciation and be able to put that money in your pocket if you are a true seller. So I hope you found this information valuable. I hope you understand the additional factors beyond supply and demand, like percent over people are paying, the number of offers. All of those are factors to give you an indication of our market. So thank you so much for watching. If you have any questions or comments, please put those below. Thank you.